Is on. Welcome everybody to our members meetup. Today is March 3rd, and I want to talk a little bit about the general market. Then we're going to go over. I had a follow-up question from last week. We were talking about the Fibonacci's. I'm going to go over that. Then we'll go over some of the trades that we got out of. Plenty of time for questions. I've got the question box up in front of me, so ask away. The market is still jittery. You can see that on Friday, it was down a bunch, but then came roaring back. I was kind of surprised at that because I thought people would wait till the weekend to see what was going on with the coronavirus, but then it roared up on Monday. I think it was up about, the SPX was up about 130, 140 points. We about ready to get back in? No, no. Because, and you can see today we're down an easy 20 points. We were actually up about 30 points early in the morning, and now we're down about 20. And you can see the kind of volatility we're having here. At this point in time, the 5 is well below the 8. It's going to take quite a while for any major moves to develop. And usually, not always, but usually, if you have a big drop like this, it will tend to retest the previous lows. Let me come up here for a second and go into a little bit more time. Let's go over a 2-year period and just take a peek. Now this was a V. Let me blow this up. This was definitely a V, but it did have a major move, and it did cross the 5, crossed over the 8, and then we had the continuation of the bull run, which actually just got it back to even from where we were in September, October of 2018, and we had that great big dip. But a lot of times what you'll have when you have a big dip like that is you'll have a retesting or at least a reasonable pullback before it continues on. Here's a retesting of the low, and then it continued on. Here's 1 test, 2 tests, 3 tests, and then it continued on. Okay, here's 1 test, 2 tests, and then it continues on. And you see this time and time again. Here was the most recent, dip, and then it roared back up, and then dipped again, and then it continued on. Okay, and I don't know what causes this other than these drops like this are basically fear in the market, fear in the marketplace. And there are a lot of people out there that sell short. And it's interesting because the explosion to the upside that we saw right here is the institutions coming back into play, and the short sellers are covering their shorts. And you get an explosion like that. It happens all the time. It happens all the time. When you get a big drop like that, it explodes to the upside. Might retest, and then it continues on. Okay, so at this point in time, are we going to retest this? Well, possibly. So I'm a little leery right now. I'm not ready to jump back into anything. Just kind of watching it. I think if we finally do get maybe a little bit of retest and 5 crosses over the 8, we're gonna have another nice little bull run. because to be quite honest with you, there's some stocks, there's many stocks that are at 4 and 5 and 10-year lows. And I'm sure there's a lot of institutional traders out there, retail traders, the whole bunch is just waiting for any kind of solidification of this before it bounces again. You know, what's happened to the credit, the Fed fund rate? Nothing. What's happened to unemployment rate? It's still at the all-time low. So the economic picture has not been affected. The fear of the coronavirus and what its effect would have on the worldwide market is what is fueling this fear. And is it over? I don't know. I don't know. But I wouldn't be a bit surprised if we have a little bit more to the downside to go. Steve, I see your hand is up. Let me unmute you. Steve, question.
Yes, I think it's about on the 24th in that time frame right there. Oh, well, actually, your chart one day says the 21st and then the 24th. In that time frame there, the 5 crossed over the 8, but it wasn't really vicious, and then all of a sudden the bottom falls out.
Right.
That's not really typical, and I was wondering that's not the way I've learned to do this. You don't, if it's just because you have a precipitous drop on one day doesn't mean to get in, because the very next day it might reverse that trend. So how do we handle this the next time? And if there is a next time, you just
there will be a next time. and the easiest thing to do, Steve, and that's why I keep going over the hedging, is that you can put on a hedge right here and think that, oh, okay, I think the market's going down. And guess what? The market goes up and then it finally went down, okay? But you putting on a hedge, you got to remember that the delta of the protective put that you buy is usually at the money is about 0.5. So if you are wrong when you put on a hedge and the market continues to go up, you are making money. You're making money in your portfolio. Okay? Because for every dollar that the market goes or your portfolio goes up, you're only down 50 cents on your option. And so anytime I feel like, whoa, it's getting a little toppy here, it's so easy to just buy an at the money protective put. They're cheap. It's cheap insurance. If it doesn't go with you, you just get out at some point, and the only thing is, rather than making $1, you've made 50 cents. But if it does drop, you are protected. Now, get back to this cross. When this crossed over, we already had a weak day, and then it rebounded back. So I was watching closely. And then we had another weak day. Towards the end of the day, I chose the hedge. Okay, let's say you didn't. What have you here? Yeah, sure. Why not? If you miss this hedge, put it on here. Look at how the market moved that day, and the 5 is definitely below the 8. Put on a hedge. All right. Protect yourself against that anxiety. If it doesn't happen, that's great. If it does, you're protected. The other thing,
I'm looking at this. I'm looking at this as not only a way to protect yourself, but looking at a way to make some money. And of course, you'll be protecting yourself, but if you hit it right, you can really add some money to your portfolio. And
By just getting out of your portfolio and buying puts.
yes,
Yeah, I don't do that. I've been doing this for a long time, Steve, as you know, and I don't buy and sell puts and calls because in this particular instance, fantastic, fantastic. You would have made a lot of money, but not always, because when you buy an option, it has to work in the direction you said it's going to do very quickly. Otherwise, that theta decay just wipes that out. So yeah, and you're not the first person, Steve, that looked at this and said, when the 5 crosses below the 8, why not just buy a put? Well, that's what we're doing, but we're not getting out of our portfolio. See, I am one to keep everything simple. And I don't want to mess around with all my stocks and everything when the market's going down. I just want to sell or buy a protected put, and I'm protected. That's the easiest thing to do. Could I buy 2 for every 1? Yeah, you could do that, but then why don't I do, when I see a major move and the 5 cross over the 8 to the upside, why don't I buy calls? I just don't do that, Steve.
okay, okay,
Okay.
all right. Thanks a lot.
Well, there was one other thing I wanted to say, and that is, and I don't know that I think I touched on this a little bit last week, but if you get the 5 crossing the 8, okay, this is the daily chart. This is the daily chart. One of the things you can do is come back over here, and let me make sure I can get this. I want to do the SPY. Okay, and when did that happen? You can see that not only did the 5 cross over the 8, but we had a measured move right here. So you can go a little finer in your look-see here and say, hey, that's worth getting out of. And then the next day it dropped like crazy, and you go, oh, geez, I didn't get out. I didn't hedge yesterday. Well, hedge that day. Don't let it get away from you. Okay?
Okay.
All right. Okay, so we're cautiously kind of waiting today. I was thinking Amazon was plus, Google was plus. Maybe it's time to get in there. Let's take a peek at Google. No. Amazon, no. Okay. So you've got to be patient here. We've got to be patient. And I know it's kind of hard to lick our wounds and say, hey, I got to get back in the market. I got to make this back. I got to do this. That's when we lose a bunch. So no, we don't have to do that at all. Now, let me bring up the walkthrough, because I think it's important. And I got burned on this. And I've been doing this for so many years, it's losing count. And I still get burned by the market. The market is a nasty beast. It's a nasty beast. And a lot of times, me included, when things are going good, you kind of get lulled into I got this. Nothing's ever going to happen. I'm cool with it. And sometimes you forget the rules. Well, what's one of our exit rules? When the 5 crosses below the 8, get the heck out. Well, I didn't do that on our options. I did do it on my hedge on my portfolio, but I didn't do it on the options. And that would have been a great thing to do on all the options. And we'll take a look at that. We'll take a look at that. Because, and that's one of the things when the market's going good and you're making money and everything's hunky-dory, it's like, well, maybe I'll let this go, especially for my new people. And I see quite a few of you in here today. Adhere to this rule. If you get a measure move opposite the trade or the 5 crosses either above or below the 8 in the opposite direction, get out. Get out. Okay, cut your losses short. Then if you're profitable, let it run till you get to the Fibonacci's. And I showed you before how, you know, it's better to get out when the market's going in your favor than waiting till it reverts back and you get the 5 crossing below the 8 and a measured move, because it's better to get out when it hits one of the Fibonacci's, and you can preset that and be ready to book the profits, than letting it go up and then come back down. Okay, so that's what I wanted to focus on today, was the fact that we coulda, shoulda, when the 5 crossed over the 8 to the bottom side, all of our options could have been protected. And let's just take a peek at them. First one is Google, and you can see that you know, the 5 crossed over the 8. It didn't do it right here, but it gapped down here, and you go, well, I'm going to stick in there. Well, why? Even if you didn't catch it here, you know, catch it here and get out. Catch it here and get out and say, well, it's recovering. Well, you know, we can get back in. So I should have sent out an alert saying, let's get the heck out of this one. It's Amazon. Let's get the heck out of this one. The RUT. Get the heck out of this one. SPX. Let's get the heck out of this one. Yeah. You don't have to catch it exactly right. Yeah, okay, that's kind of a sting when it gaps down like that, but there's no reason to not get out then, and we all should have. Now, the only thing we have right now is J&J, and that is continues to work nice for us. It was funny, I was looking at it the other day, and J&J had a huge move to the upside. And I noticed that our option price on 10 contracts, I think we were down like $50, you know, and then you get a day like this and then you're up 250. So this is work, you know, we got this all the way up here where we sold the 160, bought the 170. This is, we're liable to just hold this for a while. Let's just take a peek at what it's worth to us now. We've got that all the way till 15 May. There it is. And let's see, the mark is, yeah, it's down to about 22 cents of debit. And you say, well, you know, take 22 cents. And I might consider that. I'm holding right now because I think we might have an additional drop. But then why not get out of this, because we've made a lion's share of what we're looking for. Okay, let me go back here to Amazon. And Kara had an email, and it was a follow-up to Fibonacci's. I wanted to address that because you know, the 3 things we really focus on are the regression channel, measured moves, and Fibonacci's. I want to make sure everybody understands what I'm doing here with Fibonacci's. So her question was, I'm still not comfortable that I know which candles to use when I place my extensions. Okay, so let me get rid of that for a second. And let's just look at Amazon for a second. You had a low right here, okay? This is the lowest portion of the wick of the candle is where you click. First of all, you come down here and you click over here to Fibonacci extensions, okay? You click on the lowest portion of the candle. Now, what you want to do is you want to look here and you want to say, okay, this was a nothing day. It was in between the high and the low of the previous day, so I'm not going to count that. This was a high here, okay? This was a low here. I could have put on a measured move from here to down here, but then it had another high and another low, okay? So I'm gonna click on this guy right here, and I'm gonna take it up to here, to the highest point of the candle that day, even though it was a bearish candle. And I'm gonna click there, and I'm gonna drag down to the lowest portion of the bull candle here. And I have mine preset to automatically give me the 127, 161. This is interesting. Let me and you can preset it to anything you want. You just, I just find it easy to do. The factory default does not have the 127. I love the 127. So if you don't have the 127 in there, I would behoove you to put it in there. And all you do is add a curve and put it in. But okay, so what's this tell us now? This tells us that at 127, I'm either going to pull back or blow right through it or consolidate. Well, this one pulled back a little bit, but then blew right through it. And what did it do at the 161? It blew right through it. So you got a pretty good feel it's going to go to the 261. And here's the +2. This is a great time to take profits. Great time to take profits. Okay, so once again, oh, and one other thing. Let me go back here and go from here up to here and down to here. Okay. Now, what's the advantage of doing that? Okay, if I do it on the first measured move, it blows right through the 127, but it comes up and it halts at the 161, which is also the 127 of the second measured move. When you get a cluster like that together, you got a pretty good idea it's either going to stop and revert. But if it blows right through, then Katie barred the door, off it goes. Okay. So this was a period of caution. And there's no problem in putting on as many measured moves as you can put on. Let me actually get rid of this and say that's our first measured move, okay? And here's our second measured move. And then we have another measured move. Okay. And you can see how everything's kind of balling up in here. You know that something's going to happen around here. And it did, but then it blew right through here. Well, let me clear all these out because we had another measured move that went from here to here and back down. I mean, The more you do this, and the more measured moves that happen in series, the better off your feeling is that it's going to, it might be overextended at that point. Okay. Okay, so let me just get rid of these guys to not clutter everything up. And I'll leave that one on there. Let's take a look at the SPX. And here is a measured move. Here's one measured move. See, it goes from the bottom here of the wick. That's a higher high. That's a higher high. That's a in-between bar day, another high. Goes all the way up to here, okay? Then it comes down. Okay, so to put on a measured Fibonacci, you would click here, drag to here, and drag down to here. Okay. Then from this point, it comes up to here, then comes down to here, which is a higher low. So that's another measured move. When it makes this measured move right here, you can come here and you can click on the lowest portion of that wick, come up here and drag down. Okay. And then let's just do something here. You can see that, you had a cluster of 127 and 161 right around here, but it blew right through there. So you got a pretty good idea it's going to go to the 161 here. And then it pulled back, and then it finally pushed up to the 261, almost within a tick before it dropped. Okay, Kara, are you starting to get it? Let me go over a couple more here. Let me go over the RUT, and let's look at well, let's look at this guy. Let's look at this guy. We want to grab the Fibonacci extension. This is the high. We want to go to the highest point of the wick. Okay, down. That was a little bit of a measured move, but not really. It went all the way down to here. Then it came back up, but made a lower high, made the big measured move right here, and took it down. See, I would have gotten out right around here because the 161 and the -2 were showing. I wouldn't have worried about this follow through here. One more example. Let's go with Apple. And let's see, I want to look at the daily chart on Apple. Okay, this is good. This is good. I know I've looked at this for a reason. Okay. Okay. Notice we're in an uptrend here. Okay. And we're making measured move after measured move after measured move. And then it makes another measured move to right here. Okay. But you don't have a down measured move until it pulls down, comes back up, and makes a lower high. Not by much, but it makes a lower high, and then it comes down here with a measured move. So if I come over here and go from this top of this doji wick to this guy, okay, and probably it went all the way down to the 261, but I don't know, we'll see. Yeah. But this would have been a good time to get out right here. Okay. Kara, I see your hand is up. Let me unmute you here for a second. Question.
Hey there. Yeah, so no, this is very helpful. I appreciate it.
Sure.
So basically what I think I'm understanding is that if you see a larger measured move, you can ignore any measured moves that are within it. Like for example, you chose to put the third point of the extension, what is that, is around February 16, where you could have also potentially put it around February 9th, right? Where we had a lower high,
February.
one more over, one more to the left.
Yeah.
To the left, two more, one more over. There you go. You could, that was also a lower high, right?
Yes. Yes.
So you chose to skip over that and go to the further one, which is a higher than that one. So I would have probably put it there where you are now instead of where you decided to put it. So that helps me to know that you're going for the bigger move, the more time, a bigger time span.
Well, and not only that, but this bar here was higher than this one here. So I always want to go to the, if I'm looking for a bearish measured move, I want to go to the highest low I can, or the lowest high I can get, versus this guy right here. So rather than using this, I chose to use this for sure. Because it continued on up and made, it was a little bit higher than this one right here. So why not use that?
Okay.
Okay. Did you see an example of that in the other ones that I showed?
I don't remember.
Okay. Okay. And oh, by the way, is it Kara or Cara?
Yeah, it's Kara.
Okay, Kara. Anytime if you have a question, you know how to take a screenshot or a snippet?
Yep.
Yep. Just send me a snippet and I'll take a look at it and I'll respond to you immediately and we'll look at it anytime you want.
Okay.
All right.
Thank
Cool.
you.
All right. You're welcome. You're welcome. Okay. Look at the market going down. See, this is so volatile. It's like you gotta just watch what's going on here. And the other thing I noticed today, which I haven't seen in a long time, is the E-mini is not as low as the SPX is trading. So that's interesting. They usually go lockstep, and that's not happening today. Any other questions? I'm pretty much finished with what I wanted to discuss. But does anybody want to look at any stocks? Anybody want to look at any other questions? Any comments? We've got some time. I'd be glad to entertain anything that's on your mind. Any other stocks you want to look at? Steve, is that a new hand? Is that a new hand I see, or did you just not put it down?
No, that's a brand new fresh one there, Dale.
Go ahead.
Can we go back to the SPY?
Sure.
Now, would you go to the hedging SPY?
Oh, sure.
All right. Now, my question is basically in a nutshell, what should we be looking for? For example, if the price drops below 285, would that not be a measured move down?
Yeah, but let me just go back to I've taken the regression channel off my hedging because I don't use it that much for hedging. But let's just take a peek at what it looks like with the regression channel on there, Steve. And even looking at the a long term, a year, week, each one of these bars is a week chart. You can see that this is an outlier. This is way an outlier on the daily chart. So if it were to come down here and make a measured move at the 285, there's no way I would get any position at all, because that would just be an outlier confirming an outlier, and I wouldn't want to do that.
Well, what I was looking at too is if you look on the weekly chart off to the left, not only did it almost hit support, prior support, it has another level of support underneath that.
Yeah.
And you know, if logic has any place in time in these emotional times, you would think that if it does drop again, that 273 level would be a pretty good level to catch it at.
Yeah, but unfortunately, Steve, I think you hit the nail on the head. This is not a logical time. This is just emotions and fear and greed. And you know, I don't know. I heard the other day that yes, indeed, this could affect a large portion of our population here in America. But it's only going to really affect the people that are already having troubles with, you know, either breathing or whatever. If you're strong and healthy, it'll be like a 2-day cold and you'll get over it. So I've heard, and this was from a virologist. So I don't know. I've heard conflicting things about it, but there's still a lot of panic in here, and this is not. Yes, logic says it would come down here and stop, but during this period of time, logic has been thrown out the window.
Okay. Oh yeah. So we're basically sitting here with our feet firmly planted in midair, right?
Yeah, and that's okay.
Yeah.
That's okay.
Okay.
All
All
right.
righty then.
Good question, Steve. All right, Heinz says, do you use Fibonacci's on the weekly or daily or both? You can use Fibonacci's on any time frame. You can use it on tick by tick chart if you want to, you know, get down to that level. You know, obviously, if you get a measured move on a week chart, like this guy right here, it's going to be a stronger trend than if you get it on a 15-minute chart. Okay, but you can use Fibonacci's to, you know, one of the nice things about our SPX weekly is that we tend to look at the 15-minute chart, 30-minute chart. And you know, now this Fibonacci here wouldn't even, let's see if it even shows up over here. Yeah, it does. Yeah, it does. But if this were a daily chart, it probably wouldn't show up. And if it were a weekly chart, there's no way it would show up. So it all depends on what you're trading, what the time frame is for what you're trading. Okay, and Bill wants a question around Forex. What's the timing on Forex? And that is the same thing as our weekly SPX. And that is the, on the left-hand side, we've got the hourly chart, 90 days worth of hourly chart, and the short term is 10 days worth of 30 minutes chart. And you can see that there was a lot of money to be made when it hit up here. Actually, when it hit up here was up here to the +2. And I mentioned back then that if it made a major move, and sure enough it did, came down to 280, 261, and then made another measured move and 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 another measured move. I mean, this is something you could have ridden all the way down here. Now it's chopping. Now it's channeling, and it's channeled before, channeled up here, and we waited for a breakout, and boop, there it goes. There it goes. So the time frame, Bill, for that is the shorter term time frame. It's the time frame I use for the weeklies. Okay, you're welcome. You're welcome. All right, good deal. Oh boy, Laura, this is going to take me forever to read this guy. Holy smokes. Okay. Unfortunately, I was afraid to take a call spread, so it was only in the puts, and obviously I lost a boatload in the last 2 weeks. Yep. I was afraid of the calls, and now I'm even more afraid of the puts. Yeah, I'm conflicted between paranoia and the need to recoup my losses. Right. So guess what? Your emotions have got you so wrapped up in a ball. Now's the time to just take a deep breath, relax, regroup, wait for the market to shake out, and then we'll get back in. Laurie goes on to say, logic tells me that with this volatility, I should just sit on the sidelines and wait for normality to return. Perfect. Really appreciate your advice and your calm approach to dealing with these markets. And there you go. That's it. Now, I know that that's going to make a lot of my members, they won't like that, because a lot of my members like to get in there and they like to have action going on. Well, in my mind, unfortunately, now's not the time to get in and spin the roulette wheel, because that's what it is. That's what you'd be doing. You'd be spinning the roulette wheel. Just that easy. You look at this day here and you say, well, it's time to get back in. I'm going to put it all on green or red or black or whatever. Yep. See, I told you. Whoops. They're taking it all away from me. No, now's the time to be patient. Now's the time to be patient. Okay, excellent. Good questions. I'm going to be doing the Thursday and Sunday, getting us ready for next week. I think my feeling is that this week I'm actually looking for maybe testing the lows, maybe not fully, but some kind of an additional pullback here. And maybe towards the end of the week, maybe into next week, things might solidify. I wouldn't say it's back to normality, but things might solidify and we might be getting back in there. At this point in time, I don't want to do any bear calls. Because everything we're looking at is outliers. If anything, I'm going to wait for bull puts, and I'm going to wait for normality to come back into the market. Boy, that's a good word. I'm glad you mentioned that. And get some good bull puts, because the market is still bullish. It is still bullish. But let's sit on the sidelines for a while. Okay? All right, that's it for today. Good trading, everybody. Whoops, wait a second. Fred says, do you have an indicator on the political level? Afraid I don't. Afraid I don't. And I definitely don't want to talk politics, but I definitely am not a socialist. I'll just say that and leave it where it's at. All right, everybody. Good trading. Talk to you later. Bye-bye now.